Good morning. We have been living in the state of inertia for long, but global risk on trade has received a boost, albeit temporarily, in the form of the ECB monetary stimulus. ECB President Mario Draghi has launched an unlimited bond buying program to help calm the bond markets due to continued economic turmoil. Global markets have given a thumbs up, European stocks galloped, and US stocks too sizzled. Wall Street was also driven by encouraging reports on weekly jobless claims, private employment, and non manufacturing PMI. Friday's August jobs report could have some bearing on the next week's FOMC meet. QE3 could be round the corner, going by the recent speech of Mr. Ben Bernanke. Part of the global liquidity is likely to find its way to emerging markets like India. However, FI inflows can only lift the markets up to a point. What they badly need is the fuel of reforms, which has been in the short supply during the UPA regimes. The fuel price hike buzz is back, but it has been around for some time now. PSU disinvestment remains in a limbo even as the centre struggles to launch other reforms. The short point is that FII-powered rally will face hurdles if the government fails to act. We expect a higher opening today in the Indian markets, but the levels of 5,280 on the NSE Nifty will be critical for deciding the near-term trend. Top headlines for the day are: a fuel price hike looks imminent, and report says that government may allow oil marketing companies to go ahead with a petrol price hike of Rs 5 per litre. The month-long monsoon session of Parliament ends on Friday, and it is the second least productive sessions of all time. On a day global prices touched a new high, RBI Deputy Governor K.C. Chakrabarti urged the public against choosing gold as an asset for saving or investment. Gold crossed Rs 32,000 mark for the first time in the national capital. The CBI may ask some chief ministers and ex-chief ministers as to what their governments recommended to some private sector companies, which were later found to be ineligible for coal block allocations. The Telecom Commission is likely to finalize about 6 key policy issues related to licenses that will be issued post upcoming auctions. Due to a simmering debate over CRR, PMEAC Chairman C. Rangarajan on Thursday said the banking system should move to a situation where the CRR is used in rare cases. Infosys Technologies on Thursday said that the acquisition would be an integral part of its target to achieve a third of its revenue from products and platforms in 5 to 7 years. The FIs were net buyers of Rs 1.66 billion in the cash segment on Thursday, while the domestic institutional investors were net sellers of Rs 337.6 million as per the provisional figures released by the NSE. The FIs were net sellers of Rs 3.86 billion in the FNO segment on Thursday, according to the provisional NSE data. The foreign funds were net sellers of Rs 1.47 billion in the cash segment on Wednesday, and the mutual funds were net sellers of Rs 2.03 billion on the same day, according to SEBI figures. Moving on to recommendations, the technical call for the day is: we recommend high-risk traders to buy Tata Motors above Rs 235 for stop loss of Rs 227 and target price of Rs 251. Our derivative strategy for the day is: long Canara Bank September futures above Rs 330 for the target price of Rs 323 and a stop loss placed at Rs 308. Thank you. Wish you have a great day ahead.